Well, welcome into a daily editorial here on the KE Report. I am chatting with Jordan Roy-Byrne. He is the founder and editor of the Daily Gold. And Jordan, where I first want to start, because we are going to bounce around a little bit, is with the metals stocks. Let's look more specifically at GDX. GDX is closing in on that 19 level. It's had a good last couple days, and you sent out a recent update to your subscribers, which I read over last night, which talked about your thoughts on now GDX being in this general rally mode. You shared some of the levels you're watching, but I think more importantly, this recent rally is now making you think that we won't be in the near term going back and testing those lows that were put in about a week ago, maybe just a little bit more than a week ago. What's the significance here? And please share some of those levels that you're watching.
Yes, Corey. Well, coming into the week, I had some hope. I really wanted to see the miners come back down and retest those lows, and that's not happening because this week they're up 4% or so. So it's a good week, and going back a week or 2 weeks ago, the GDX and GDXJ came, I think, within 4% of my downside target. So I was actually hoping that we would see them get a little bit more oversold, and then they would have more room to rally. I mean, here today, GDX the high today came within a couple cents of touching 19, and we know that the breakdown point was at 21 or 20 and a half, depending on how you look at it. So, and the August high is at 19 and a half. So in the short term, there's strong resistance close to 1950. So, over the days ahead, I don't see that much more upside for GDX because it's probably going to hit that August high. And also we had that big gap down. It was on a Monday in August, the middle of August, when the market really fell. And that gap is right around 1950. So again, GDX nearly hit 19 a little while ago, and there's very strong resistance at 1950. So at this point, I wouldn't really. I mean, we've seen a decent move from about 17 up to nearly 19. There's probably a little bit more upside, but I'm not. This isn't something I would want to chase here and now. It just seems like we've already had a little bit of a rally. There's probably a little bit more to go, but I don't see a whole lot more upside. Maybe GDX can eventually get to 20 and a half on this move. I'm not sure, but in the very short term, look for 1950 to knock the market back down a little bit.
Okay, that 20 and a half or 21 level, I think, is the most important one for the bullish case if we do want at least GDX to get back into that trading range, because quite frankly, we have been trading at 52-week lows, and that's never fun to see for any market. What do you think, though, about the possibility of this also lining up with the upcoming Fed rate hike? Usually, the argument had been that Fed rate hikes were doing good things for gold. Gold would bounce on the back of those. That hadn't necessarily been the case the last couple rate hikes, and now if we see a little appreciation in the metals up to the rate hike, maybe what would make sense, actually, is on a rate hike, the metals get pushed down. Do you think that could be almost a stopping point for this recent rally?
It really depends on how high we move over the next week. I think that the meeting is next Wednesday, so exactly 1 week from now. If it, I really don't. To me, it's really about the market first and foremost. Regardless of what the Fed says or what word they say and all those things, I really don't care about that. I care about where's the market. Is the market oversold and trading at support, or is it a little bit overbought and trading near resistance? And so if this rally continues over the next couple of trading days and GDX is getting up to 1950, then it's more likely to, because 1950, as I said, that's pretty strong resistance. It's more likely to sell off after the Fed. So I think first and foremost, just focus on where's the market trading at. I mean, until the last couple of days, I was thinking that, okay, we'd see GDX would remain weak. It wouldn't start to rally until we got to that meeting or close to it. But now, as you've said, now that we've started to rally before the meeting, I mean, if this rally continues over the next couple trading days and we get up to that resistance around 1950, maybe even a little bit higher, and fill that gap, that could set up for a sell-off post-Fed. I mean, not a huge sell-off, but a sell-off for a couple of days. So again, for me, it's really, look at the price action, because and if the market is trading near support or resistance, if it's overbought, et cetera, those things are going to give you a better sense of how the market reacts to the Fed. And one thing we have to keep in mind with the Fed is, sometimes this has happened quite a bit where, they say something and then the market deems it really bullish for precious metals, and you get a huge rally that day or maybe the next day, and then it completely goes the other way. So, I mean, that's why I'm just not really a fan of Fed Day. Markets price in news. I mean, news is a lagging indicator. So what the market, the context of the market before going into the meeting, to me, that's most important. I don't place a lot of weight on, what the Fed says or, what they do. I mean, we know they're going to hike, but it's just, I mean, this idea that the Fed is going to be really dovish or really hawkish and it's suddenly going to create a new trend in precious metals, that just doesn't make any sense to me. I mean, look, the big picture is precious metals were really oversold in the last couple of weeks. They're starting a rally here. It probably has a little bit more upside, and so the Fed isn't really going to change that. We know they're going to hike. They're probably going to hike again in December. Maybe they'll say something. Well, we're thinking of possibly slowing down our rate hikes next year, but that's just rhetoric. I mean, that fades in a day or so, and of course that can change down the line. So I guess for my little diatribe here, the point is just follow what the market's doing first and foremost. And as I said, the market, we're rebounding because the sector is really oversold. And if GDX continues to gain over the next week, Corey, getting close to 1950 or even 20, then it's likely to sell off or soften after the Fed.
And again, not just because of the Fed, because I think we all, as you pointed out, really know what the Fed is going to be doing, whether they change a couple words in their statement or not. Fact of the matter is they are going to be hiking rates and looking to December or in that time frame to hike again. And again, don't put too much weight on what happens the day or two after the Fed hike. Pay attention more to that trend that develops because, usually it can reverse itself for those just short-term moves. Let's also quickly touch on yields because we're seeing the 30-year up at 3.21%, the 10-year is above 3%, seems to be stabilizing there. We're definitely seeing yields continue their uptrend and now getting very close to trading at 52-week highs and quite frankly breaking out for highs that we haven't seen in much longer time frames. What do you have to say about this uptrend in yields that seems to be, or at least is, very close to breaking out?
Well, we talked about this earlier in the year and in recent months, how sentiment got really bearish on bonds or really bullish as far as expecting higher yields. And when you have that kind of condition, the market can correct or consolidate to, digest that condition. And looking at the 30-year, I think that's more important because that's the long bond. I mean, both are obviously trading around important resistance, but looking at the 30-year, I mean, that has important resistance. I want to say around 320 or 3.25. And looking at it, I mean, it's pretty close to a major breakout. And so that would be quite significant because it would probably signal a rise in inflation expectations moving forward. And that it would be interesting to see, does that hasten the pace of rate hikes, or do we see, even with inflation expectations potentially rising, would we see a slower pace of hikes or even a stop at some point if the economy, if these hikes start to affect the economy? So, I think a breakout in yields and rising inflation expectations, eventually that's good for precious metals, but not imminently or immediately. It doesn't really change my big picture view on precious metals, but it does. I mean, over the long term, it is a positive development for precious metals. As far as what that means for the other markets, at some point it's probably going to start to hurt the stock market when you see, maybe not initially if we get the breakout in yields, but if the breakout is sustained and we start to see, the 30-year, again, it's in the low threes right now. Like if we see that trade up to 4%, at that point, that could start to really put pressure on the equity market. And again, for precious metals, that's what we need. But that's not necessarily, something I'd look for in the next couple weeks or the couple months. That's something that, probably sometime next year.
Okay, fair enough. And you know what it is? I think just noteworthy to realize that trend for yields is up, and we are very close to breaking out of some of that short-term resistance. That eventually will have its impact on the markets, but there is no absolute answer, no telling where that might be. Let's also talk about uranium, because you issued a new update in your flash update to subscribers that talked about a uranium juniors index that you put together, a basket of 11 uranium juniors. And due to the recent trading, they're looking close to breaking out to highs for at least 52-week highs after that bounce that some of these juniors got at the tail end of 2017. What do you think? The sweet spot here now for uranium juniors. Are you chasing this higher?
Well, it's too bad the URA ETF. I'm not an expert on that, but if you look at it, there's only a few uranium companies in it, and I know that there's some utilities in it. So I know they changed the makeup of that ETF, and so it kind of it's not as representative of being a uranium ETF as it was, I want to say, a year ago. So that's why I created this index where I just looked at 11 juniors and weighted it by cap, but not perfectly. And that index, Corey, as you noted, this has two areas of resistance I'm looking at. One is like a point or two, so we could say maybe a couple percent above where we are now. And if the uranium juniors can break above that, they would be at a new 52-week high and also an 18-month high. And about 15 to 20% above that level is resistance going back to, I don't have the chart in front of me, but I think it's 2017 resistance and then 2016 resistance. So that second resistance, I mean, you get a breakout above that uranium, uranium juniors are looking at a 4-year high. That's a major breakout. So this is, and by the way, here and now, the index is trading above all the long-term moving averages. And I don't want to say they're perfectly aligned, but they're nearly perfectly aligned where they're sloping up and the market's above it. So what we're seeing in the uranium sector right now is very interesting because this could develop into a potential bull market. Before the end of this year or perhaps into 2019. I mean, it's just the technical setup is there. They're looking bullish. And we know all the fundamentals. I mean, we know that there's been production cuts. There's this Section 232 investigation into uranium imports in the U.S., and that's good for U.S. Producers and U.S. uranium companies. And that's why some of those have been zooming higher over the last couple months. But it's, we've all heard about the fundamentals for uranium and that they're super bullish. And look, it doesn't matter what these types of sectors, what I should say is it's hard to know the timing when they're going to take off, but you have to follow the market and read what the tape is telling you. And the tape is telling us right now for the uranium stocks that this could be the start of a new bull market. They're in the technical position for that to happen. They've been trending up. The index is already above the long-term moving averages. And, this looks like it's going to be an area that really has potential for a bull market to start. So it's definitely something that I'm keeping my eye on very closely.
I don't blame you, Jordan. I've gotten many emails and comments about the uranium market. I've chatted to more and more people about uranium. It seems like we are very much on the road to a bull market, if we haven't already started one. A bit slow moving to get going, but quite frankly, there are not just news stories and not just charts that are all lining up to point in the direction of hopefully a sustained longer run in uranium. Jordan, it's great chatting with you. Thanks for breaking down some of your recent updates to subscribers. I will be posting a link below this interview to Jordan's website. I highly recommend going to his website, The Daily Gold, and checking out some of the free content, and also consider subscribing to his service. Thanks again for your time, Jordan.